Which part of Mahandoy are you? No? Are you in the housing? What's the name of the housing there? Forgot already. Oh, Yummy Cafe. Yeah, the car wash. Is it? Yeah, I always go there. I always, you know, wash my car there. Which part of your house? Which one? In the back? Your relative. Oh, oh, Kelansanan. Kelansanan yang Pinanam lah. So far, any problem with this, the first part? Cash book? What do you think about the others? Like Farah and this, Calvin? Well, if they have problem, then probably I can, you know, instead of asking me, can would probably talk to you, you know, in more convenient. Good. But then if they need, I sit always about. So just that they have to do the tutorial so that they can, you know, understand what they don't understand. Morning, Calvin. Alright. Okay. Just a recap what we have. You can hear me clearly. Just wait for a while. Can you kind of Okay, while waiting, just a recap. Yeah. So remember, cash book is normally we are preparing in three-column cash book. So three-column on the debit side, three-column on the credit side. So we have four accounts of, I mean, there are three accounts of four accounts altogether. So we have discount received, discount allowed, bank column, and cash column. So those are the four accounts in one book. Okay, on the debit side, so mostly on receiving money, okay, either by check or by cash, then it will be debited, right? And discount allowed, because this discount allowed is a debit item account, so it will be on the debit side. And whereas the credit side will be the payment either by check or payment by cash. Okay, it will be on the credit side. And credit item for revenue account, that is discount receipt. Okay, so a cash book is a prime entry and also a general ledger account, playing two different roles. Okay, meaning as you have prepared a cash book as a prime entry, you don't have to prepare another account, cash account, and bank account in the general ledger. So the cash column and the bank column only is considered as part of the general ledger, but the discount received, the discount allowed is not part of the general ledger yet. So you have to open up discount received account and discount allowed account in the general ledger. Okay, so any news from Farah? No,
No.
you didn't reply.
Yeah.
Okay, bear in mind, 15 minutes if you normally it will be considered as absent. Okay, now and also if your attendance achieving 80%, you'll be automatically barred from the exam. So you don't want to be in that position. Eh? Okay, so this one we have covered. Contra entry. So contra entry is an entry which the transfer or the recording debit and credit will done in the same book, yeah, in the cash book. That is, whenever we have a transaction between cash column and bank column, right? And then the next one is we have capital injection or capital contribution. Now, what is the meaning? Meaning the amount of money or the amount of resources that is brought by the owner into the business. So capital injection, this one is in terms of money. The business owner inject or contribute capital into the business. So the capital contribution either in the form of cash or check. So they will a ledger account is opened in the general ledger for capital. Okay, since this is a contribution in cash or in check. So therefore, the prime entry actually is the cash book, isn't it? Because it's cash transaction. But then this illustration here, this is a journal entry explaining to you what is the account to be debited and what account to be credited. Now, when the owner inject money, let's say RM 10,000 cash or 10,000 check. So meaning the keyword will be check and capital, isn't it? Then we categorize check is a bank account, is an asset. So debit item, increase of debit item, we debit bank. And definitely, if we debited bank, so the corresponding entry which we have identified through the keyword capital will be definitely credited. Okay. Now, why capital is credited? Capital is an equity. So remember, as what I've told you, any contribution made by the owner or related with the owner is an equity. So equity is a credit item. So before we don't have capital, now we have capital. So increase in capital, therefore, is a credit item. So we credit capital. Okay. So then we have a description or narrative stating what is this the entry all about is a capital contributed by the business owner. Then we normally, okay, we open up in a general ledger following opening this account. So we have put into the bank the cash book, yeah, in the bank column as a prime entry. So we just open up a capital account in the general ledger because the bank column is considered as one of the general ledger account. Okay. Next one. Withdrawal. Withdrawal meaning referring to the drawings. So like what I've explained to you, drawings is resources taken out by the owner from the business to be used for his personal purposes. Okay. So withdrawal, drawing, payment, credit side of cash book or cash or check. Meaning this cash book and check, this bank account is actually an asset. So when it's taken out from by the owner, meaning it reduces the bank, it reduces the check, the bank, sorry, the cash. So meaning we have to credit. So that's why credit side of cash book, and the drawing will be debited. So like what we have here, Janice issue a check 800 to pay for his personal life insurance premium. The keyword Janice, okay, check. So this is the keyword, meaning check is bank, Janice is the owner, so equity. So equity, that is drawing. So the bank, definitely we understand the bank reduces 800. So therefore we have to credit bank. So the corresponding account, which is drawing, definitely to be debited, isn't it? Because we are observing the double entry rule. If we credited the bank, we 100% sure because this is payment, bank will be credited. So debit, the corresponding account, the next account will be debited. Okay, what account? So which we have identified the keyword just now, that is drawings, Janice. Yeah. So then we okay, we put the narrative or description of this transaction, drawing by check. So this is not prime entry. This is only journal entry explaining to you what is the account to be debited and what account to be credited. Okay, that is withdrawal drawings. Just now was contribution. So these are the two things, okay, related with the owner. None other than this. So even like drawing for goods, not cash, not check. So we record in the drawing account. So what is account to be credited? So this is if it's cash, then it will be bank or cash account. Yeah. But if it's good, the trading item taken by the owner, then it will be purchases will be credited. No? Purchases will be credited and drawing always debit. Now, closing the cash book. Later, Noel, once you have the response, let me know. You just interrupt me. Closing the cash book. At the end of every month, the cash book is closed in order to do the posting of total to the general ledger. So we have to close on monthly basis. Okay, end of the month, end of every month. Then after that, we do the double entry to the general ledger. So the cash account, cash in hand, cash column should always have a positive balance. What is positive balance? So cash account and the checkbook, yeah, the bank account, all of this is a debit item, isn't it? So positive balance meaning if your total debit is always, is more than total credit. So that is positive balance. But if it's the opposite, this is a debit item, but then the credit total is more than the debit side, then this is negative balance. Okay, so that happened to bank. Bank normally will have either positive or negative. Okay, because bank is current account, isn't it? So because of the facilities on bank overdraft, so that is why the bank account is possible to have negative balance, meaning the business can use more than the money they have in the current account. Okay, but cash account always positive balance because cash account is referring to cash in hand. So meaning you only make payment according to what you have in hand. So if your in hand finish, you can't pay anymore, isn't it? You can't have negative. So that is the meaning. Because the amount that is left inside the office kept by cashier. So if it's no more remaining balance, then how can you make payment through cash account? Isn't it? So but the bank account is different because of the credit overdraft facility. Yeah, bank overdraft facility. So if we have a debit balance, meaning there is excess cash left in the bank account, meaning you have money, the business have money in the bank account for the business to use the following month. Okay, debit balance meaning the total debit, that is the deposit, more than the payment on the credit side. Okay, so credit balance means the payment is more than the deposit. So bank overdraft, the business had used more than the available cash kept in the bank account. So bank overdraft is actually a special loan that has been approved by the bank for the business to issue check more than the amount deposited into the current account. So the bank overdraft facility will specify the maximum limit available for the business to use. So overdraft interest will be calculated based on the actual amount of bank overdraft balance, usually on a monthly basis. Okay, so the interest on the bank overdraft is very high. So that's why the business try not to use this bank overdraft facility. But if a situation or if the needs arises, so they have no choice, they have to use the bank overdraft facility. So it is a special loan. Okay, so uh, you can use, for emergency purposes. So if you need to make payment more than the money you have, so you can use the bank overdraft facility. Okay, so after you use your bank overdraft, so meaning you will have credit balance. Okay, payment is more than the deposit you have in the current account. Now that was a cash book. So the first prime entry. So the second prime entry is petty cash book. So cash, we have two types in the business. So one is cash book. Yeah, the other one is petty cash book. So cash book, you have bank column, you have cash. So cash is referring to cash in hand. So this one is uh, being held by the main cashier. And we have another one for smaller part, yeah, smaller cash flow. They call it petty cash flow. So kept by the petty cashier. So petty cash book also like the cash flow, playing two different roles. As as a book of original entry, as a prime entry, and also as a ledger. So meaning to say, once you have prepared the prime entry on petty cash book, so you are not required to open up another petty cash account in the journal. So the prime entry petty cash book that you have prepared is regarded as one of the general ledger account. So that is the meaning. Petty cash book is both the books of original entry and a ledger. So this one is used to record small cash payment for any immaterial expenses. Immaterial expenses meaning not significant expenses or small expenses. Okay, like taxi fare, purchase of stationery, postage, donation, and etc. Oh yeah, I forgot to ask you to on your camera so I can see you. Plus, can you hear me? Kevin, put on your camera. Okay, thank you. All right. So, how do you distinguish between petty cash book and cash book? So normally the transaction will state, okay, whether the payment source, yeah, is from petty cash book or the cash book, or you look at the amount. If the amount is small amount, then it will be using petty cash book. Now, it is used to record small cash payment for any material expenses, okay, purchase of stationery, postage, donation, and etc. Normally, the cash flow meaning the maximum amount the petty cash will hold the money, okay, not more than 1,000. They will hold 1,000, and not more. So the working of petty cash book is similar of the cash book. So meaning saying because they are regarded as an asset, so a debit item. So any increase of petty cash book, it will be on the debit side. Any payment made by the petty cash book will be on the credit side. Okay, so debit item. Yeah. So again, they are using the same flow, which is we need the source document, and the prime entry will be petty cash book. Then after that, we do the posting to the ledger. Okay, so what are the source documents involved in the petty cash book? So we must have petty cash voucher. So this is essential. This is a must. So we must have this petty cash voucher and supported with the original bills. Okay, meaning these are original bills that provided. I mean, the person who want to claim the money, okay, they must provide the original bills. And then payment voucher for reimbursement of petty cash amount. So this one is another payment voucher which is to replenish, meaning after at the end of the month, when after making all the payment of petty cash book, so the money of course reduced, isn't it? So let's say you have a amount of loan, cash amount of loan, which is 1,000, and then they have made payment 900. So the cash in hand left over is 100, isn't it? So at the end of the month, so they have to claim reimburse back, meaning they have to submit to the main cashier, okay? So the payment voucher for reimbursement, okay? Together with all the petty cash voucher with original bill, then the main cashier will reimburse back according to the payment that he had made. So 900, so he will pay 900. So the float will be back to 1,000. Then they will post it to the journal. So this is the source document. So you have gone through these original bills, meaning referring to the cash received, taxes split, or transaction incurred. Petty cash voucher, this one is the record payment of petty cash claim. Okay, it must be supported with original bill. Payment voucher, the record payment by cash or by check whenever a reimbursement is requested to top up the balance. So in petty cash book, we are using impress system. So impress system meaning is a system where at the end of the period, the cashier, okay, the main cashier holding the cash book, okay, will reimburse meaning will pay back according to the amount that is being spent by the petty cashier. Okay, reimburse the petty cashier the amount of petty cash spent during the period, so that the petty cashier will start with the same amount of petty cash flow for the next following month. Now, the source document are what is cash bill or cash receipt. Okay, petty cashier will issue the petty cash voucher and signed by the recipient to acknowledge the receipt of the petty cash flow. So that is the use of this petty cash voucher. So meaning underneath the petty cash voucher, you have a signature to acknowledge receiving the petty cash amount. Okay. Now the advantage of Impress system, besides being useful for control and monitoring petty cash payment, okay, these are the advantages. So sometimes you have this in the question, the exam question. The size of the float can be adjusted according to the needs of the business, depending on the frequency and depending on the amount of petty cash payment. So what does it mean? Meaning, if we are using petty cash book, of course, this petty cash book is using Impress system. The Impress system means a system where at the end of the month, the petty cashier will be reimbursed back by the main cashier the amount that is being spent through the petty cash book. Okay, so what is the advantage of using this system? Because the float, the size of the float can be, I mean, it is adjustable. So as need arises, they can increase how much is the amount needed. If let's say the needs not so much, so they can reduce. So it's flexible, can be adjusted according to the needs of the business. So how do we evaluate? So depending on the frequency. Previous month, look at the frequency, how often we make payment, and what is the amount spent on previous month. So that will be our policy for the next month cash flow. Okay, so the float is adjustable. And the second benefit is the element of safety and element of accountability are maintained, since the petty cash is under the responsibility of an appointed petty cashier, and he or she has to get regular reimbursement from the cashier. Can you understand what does it mean? It means if we have a certain people, I mean, we have a specific person who is responsible holding this petty cash. So it's much more easier. The safety of the money and accountability of the money is there because one person only. So if anything happened to the cash, let's say he lost the cash, the petty cash. So he is responsible. So he has the duty to replace it, isn't it? So that is one of the safety. And then accountability. So any payment that is, they only make payment related with the business. Any payment that is not related to the business, he is accountable for. So he has to repay back. So that is the meaning. So this is the benefit of using a press system. Now look at the format. So a little bit different from the cash book, because as you can see, debit and credit in the cash book, you have on the left and on the right. But this petty cash book, they make it side by side. Yeah, receipt, debit, payment, credit. Okay, why? Because the receipt, okay, we only have once in a month. That is when the petty cashier reimburse back because we are using impress system, isn't it? So it will be side by side. So we do in columnar form, in a table form like this. Okay, we have a date column, we have a particular column, we have petty cash voucher column, we have receipt column that is representing debit because debit item meaning if it's received money, so it will increase the petty cash. So it will, if the petty cash make payment, it reduces, so it will be credited. Then the payment we have to record twice. Okay, the first recording will be in the payment column, and after that we have to put it into the analysis, okay, of related expenses. Okay, these are the normal group of expenses for petty cash flow. So that is anything related with stationery. Related with stationery meaning referring to the pen, yeah, referring to paper, A4 paper, stapler, anything related with stationery, like we have rubber, Tipex, liquid paper. Okay, all that will be under this column, stationery. After we record on the payment side, and then we post into the appropriate group of expenses. Okay, because this is a small payment, huh? So meaning we cannot present the small payment into as one item because it's too, I mean, it's insignificant. So we will have too many expenses. So that's why we make it a group. So we put a group name here, stationery. So anything related to stationery, we put under stationery column. Then postage. Postage, okay, related with like stamp, we have to buy stamp in order to mail the letter, or even we have to courier the item. So the courier charges will be under postage. Okay, let's say you want to send it by post laju or by DHL. Okay, the charges, the courier charges will be grouped as postage column. Then travel column. This one is related with traveling, not referring to a passage like air tickets. No, this is referring to like bus, taxi fare, LRT fee. What else? uh, Anything that is related with transportation. Okay, let's say you have to compensate the fuel that is used by the staff. Okay, so is under travel also. Now, so those are the three. So meaning if the expenses is not stationary, is not related with postage, is not related with travel, then we put under sundry. So sundry meaning is very general term. So anything can fit in. So if you can't fit in into these three appropriate groups, stationary, postage, travel, and you put under sundry. So these are the common analysis or group of expenses we have in petty cash. Okay. Yes, Farah, good morning.
Good morning, sir.
Yeah, why are you late?
I overslept just now.
Oh, you. Okay. Make sure don't leave until more than 15. The system is consider you as absent. Okay.
Okay, sir. Okay.
All right. So let's say this is the illustration. Alan started the business on the 1st of July. He decided to have a petty cash, a small amount of payment for a month. A check amount of 200 was issued as a petty cash flow. So petty cash flow, meaning this is the flow they have, the cash, petty cash that is provided to the petty cash flow. Maximum is 200. Okay. But remember, the rules is maximum is 1,000. So this is adjustable. So during the month, the following transaction took place. So stamp, bus fare, donation, pencil, eraser, coffee, taxi fare, telegram, E4 paper, Milo, LRT ticket, parcel, cleaning. So these are the expenses that is paid using petty cash flow. during the month of July. So now we do the recording in the front entry petty cash book. So the format, follow the format. So we using columnar form. So we have a date column, okay, to record all the date of the transaction. Particular column, this is to record the type of expenses that we have paid. And then voucher number referring to the petty cash voucher. So if you are not provided in the exam, uh, you just create it. Yeah, like this one is July. So this, let's say this one I change it to May. So this is all five. Huh? Five is representing May. So number one, number two, number three, and until how many transactions you have for that particular month. Okay, so that's if you are asked to provide the petty cash voucher number. So you don't have to, think very hard. So just make it simple. So depending on what month. So if it's July, like this is July, so you put here July, 7 to represent July. Okay, so it's depend on your style. So just now, as okay, given here 200 was issued to petty cash voucher. So you record on the 1st of July. Okay, this one is issued to petty cash flow. So meaning the petty cash received money 200, isn't it? So that's why you record on the receipt column 200. Then the particular you write down, okay, because you're receiving check amount. So you put particular as bank and the date July the 1st. Okay, then we make payment on the second stamp. So first thing you record on the credit side, the payment column of 20. Then after that, you group these particular expenses in the appropriate group expenses. So these are the normal group that we have in a petty cash flow. I mean, in a petty cash book. Okay, normally we have stationery, postage, travel, and sundry. So stamp is related with postage. So we put into the postage column. Then, so bus fare, 11 ringgit. So record in the payment side first, and you record into the appropriate group, related group. So this is related with travel. Okay, so 11 travel. And then the next one is donation. Okay, record in the payment side 22, then put into the group. So it's not related with stationery. It's not related with postage, not related with travel. So meaning you can put into the sundry because sundry is more general. Okay, so pencil 14 record in the payment column, then record in the related group, which is related with stationery. Copy 15 not related with stationery, postage not related with travel, then put into sundry. Taxi fare 16 related with travel, so then put into the travel. Okay, telegram 13 record in the payment side first, then record into the postage. Yeah, because related with postage. You know it's telegram. Telegram meaning we are sending the message through the telegram, but normally now we seldom use it. But last time we have this, okay, and quite expensive to make payment. So this is under postage. Paper, okay, record in the payment side column, payment column, then put into the related group, so which is stationery. And Milo, 17, record in the payment side, not related with stationery, postage, travel, then put into the sundry. Okay, LRT only in KL we have, so this is like transportation. So record in the payment column, and then after that put into the travel column 12. Okay, parcel 19. So record in the payment column and the postage, the proper group there. And the last one, cleaning, 21. So cleaning is not related to stationery, postage, and travel. We put under sundry. Now, this is the end of the month, 28th of July. So no more payment that we made through petty cash flow. So we do a single line above above the total. So we total the payment side. So total payment is 198, and then total each of the group expenses, stationery 14 plus 18, 32, postage 20 plus 13, 19, 52, travel 11, 16, 12, 39, sundry 22, 15, 17, 21, we have 75 in total. So then, meaning the group, yeah, the group expenses we have finalized. So therefore, we do the bottom part a double line, meaning a double line is indicating. So we have done with this transaction, no more transaction involving stationery, postage, travel, and sundry. Now the payment side we have not done yet. Okay, so we make a total line just like just now, single line on the top and double line underneath. So compare, okay, 198 and 200, which amount is higher? So 200 is higher. So meaning we put 200 as a total for both sides. The receipt debit side 200, the payment credit side 200. Then in order to make the total credit, okay, 200, we need the balancing figure. Yeah. So this is 2 ringgit here. 198 plus 2 then become 200. Okay. So this 2 ringgit, okay, we need to write down the particular as balance. This BAL represent balance. Okay. So CD, okay, so CD means carried down. D means down. C means carried. So meaning these 2 ringgit will carry down the bottom to the following month. Okay. So this is from meaning total debit. This is debit. Eh? This is debit total more than the credit total 198 by this much. So this is debit balance. Total debit more than credit 2 ringgit. So 2 ringgit is the debit balance. So we carry down. Carry down means below the total, we put another 2 ringgit here on the debit side. So this balance become brought down. So B stand for brought. So D means down, brought down. Huh? Okay. So sometimes they use CB and CF also, or BF. So F forward, carried forward, okay, brought forward. So that will be the possible terms. Yeah. So that is the meaning. Yeah? So carry down meaning we carry down because this is the total debit balance. So we put on the below the total on the debit side as balance brought down. Then this because we are using impress system, okay, we will be reimbursed according to the amount that is being spent. So this is the amount that we spent. Okay, so we debit, yeah, under receipt column, we debit petty cash flow, and then this is the particular. We credit bank. And then how much is the amount? According to the amount that is being spent. So this is impress system. Any question? Can you understand? Okay.
Yeah.
Okay. Farah?
Yes.
Yes,
Is
huh?
it the difference is just they didn't use the 2 ringgit?
Yeah, meaning this is the cash in hand. not been used yet.
So they give it back to the
They will carry forward to the next period
carry forward to the next period. That means
in the
that
month of
means
August.
that means the August they have 202 ringgit instead.
No, now you see 198 plus 2 is 200. So back to the original flow, 200.
Oh, so still 200
Yeah.
200 again.
Because that is the limit.
Okay.
Okay, but this is adjustable. Adjustable. Okay. Now next one. So August the 1st, so we will have balance brought down to 200. Then this is end of the month already, so we need to post this amount into the general ledger. So we don't have to prepare petty cash account in the general ledger because, like cash book, petty cash plays two roles as a prime entry and as a general ledger account. So you don't have to open a petty cash book again in the general ledger, but only the group expenses. So just now we have stationery. This is stationery. So we take the total only. And then we have postage. Okay, we open up postage account. And then we have travel, 39. And we have the last one is, what is this? Sundry. Okay, so we open up stationery account. We open up postage account. We open up travel account. We open up sundry account, then complete the double entry. Just now, we only do a credit entry, isn't it? We credit petty cash book. So this is credit. And then we just group them into the group expenses. So this is not double entry yet. So we only to facilitate us to calculate the total amount because we do not want to post it one by one, but we take total, yeah, in 1 month. So much more productive. Okay, postage 52, travel 39, sundry 75. Or otherwise, if you do the posting one by one, you will have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 posting instead of 4 posting only, isn't it? So that is to simplify. So this is only, I mean, what if the big company, one day they can have 100 petty cash transaction. So you will have so many posting. So in order to avoid the complication, so we just take the total. Okay. So total, so this is credit, yeah, and then debit will be stationery account. We take the total 32, 52 for postage, travel 39, sundry 75. And the particular, because it's from petty cash book, so we just write down here, petty cash, petty cash, petty cash, petty cash. And the date, we don't put according to the date of the transaction like this one. Okay, first, second, fourth, fifth. But since this is in total, we just put when did we do the posting? So the last day of the month, 31st. Okay, the last day of the month, 31st of July. If it's June, 30th of June. If it's August, 31st of August. July, 30th of September. Okay, then complete. That's it. So that is petty cash flow. Okay, we continue to the next, or probably you need time to absorb first, or can we continue this one?
Oh, the petty cash usually below how much? Below how much money? They consider
Yeah,
petty cash.
normally the question will set, or even if in the working place, they will decide. So the maximum, then the maximum petty cash is not more than 1,000.
Not more than 1,000. Maybe
Mm.
if it's a little bit more than 1,000, do they sometimes also consider it,
Can.
do they make,
This
make
is
exception?
based on this characteristic advantage. The size of the float can be adjusted.
Okay.
So that is depending on the previous month. In the previous month, we frequently use the petty cash to make payment, then we can increase the float. Okay. Anything else?
No.
Para? Para or what? Federal.
No.
How to pronounce the name?
Fair.
Para. All right. So if no question, then we continue with purchases cycle. Okay. So look at the learning outcome. So these are the area that you will be tested. So you must understand each one of them. So you need to understand cash purchases and credit purchases and its nature. And then what are the items involved in purchases cycle? So remember, credit purchases, okay, the prime entry will be purchases journal. If it's cash purchases, what is the prime entry? What do you think? Can you guess, Calvin? If
Purchases,
it's cash purchases,
uh,
what is the prime entry?
buying a car,
Come again?
buying a car for transportation like that.
No, that one, what you do is example. What I mean is, what is the prime entry? What is the prime entry? Meaning, apakah buku catatan pertama you have to record? If it's cash purchases,
Who pay?
let me give you a hint. Uh, the prime entry, if it's, I mean, the previous chapter that we have learned, what is the prime entry that we have learned just now? We have two, cash book and petty cash book. So if it's cash purchases, which prime entry are we recording? Which prime entry do we record?
Or cash flow,
Cash book.
cash book.
Yeah, because remember, cash book is a prime entry for cash transaction, either by cash or by check. Okay, so that is why if it's cash purchases, meaning the business buy the trading item from the supplier and immediately make the payment to the supplier. So that is cash transaction. And what is the prime entry for the cash transaction? The cash book, because you make a payment by check or by cash. So you have to record in the cash book first. Got it?
Okay.
You don't sound confident.
Uh,
Are you okay? Okay. If it's credit purchases, the prime entry will be purchases journal. Do you understand what is prime entry? Prime entry is buku catatan pertama. Is like a diary. Yeah, meaning every transaction you must record in the diary, in the buku catatan pertama. So what is buku catatan pertama? For credit purchases, it will be purchases journal. So we are going to learn how to prepare the purchases journal, because that is part of the, I mean, what you ask in the exam. Yeah, so you must understand it. And then in the purchases cycle, we have purchases return. So what is the meaning purchases return? These are the good returned back by the business to the supplier. Okay, so the prime entry for purchases return, it will be return outward journal. Okay, outward journal meaning going out to, from the business to the supplier. Payment to trade payable, okay, then the prime entry will be cash book. Okay, so you need to understand all these 5 items. Huh? Now purchases. So purchases, payment to trade supplier determine the type of purchases. So we look at the payment type in order for us to distinguish the purchases. If it's cash purchases, yeah, meaning the business buy the item and immediately make the payment. So we debit purchases account and we credit cash or the bank. Okay, I hope you understand why we credit cash, why we credit bank, because the cash reduces, the bank reduces when we make the payment, isn't it? So if cash and bank credited, so the corresponding account must be debited. So where do we debit? We debit the purchases. Okay, first thing you have to read the transaction and then identify what are the two items involved. So if you are confident with the cash will be credited, so the corresponding entry that the item that you have identified, which is purchases, will be definitely debited. Yeah, debited. And remember, the explanation why purchases is debited because purchases is an expenses. So expenses is a debit item. So debit item, before we don't have purchases, but now we have purchases. So meaning indicating increase of purchases. So that's why we debit. Okay. Now, if opposite than cash purchases, it will be credit purchases. So credit purchases, we record in the purchases journal as a prime entry. If it's a credit sales, then it will be recorded in the sales journal as a prime entry. So remember, after the journal, then we have to do the recording into the purchases ledger or into the sales ledger. So what do we have in purchases ledger? This is individual supplier, the trade payables account. And what about the sales ledger? Individual customer, trade receivables account. Okay, purchases account and sales account in general ledger. Okay, we will have in total. Okay, for calculating the balance carried down. Yeah, balance carried down. C is carried, D is down. So this is representing the closing balance of the purchases account and the sales account. Okay, and total purchases for the month, then post to the purchases figure to trial balance. Right. And then business by trading goods and pay immediately by way of cash, check, credit card, transfer of fund to trade supplier's account. So the source document will be cash bill, cash invoices from trade suppliers. So this one is referring to cash purchases. Yeah? Business buys trading good and pays immediately. So meaning this is cash purchases. So the prime entry will be cash book. So
Is
the
it
books are prime.
is it also one person manage or multiple person manage?
Yeah, either is a sole trader or it's partnership or it's company. They are using the same recording, so
Is
that
it
people would understand.
is it only one person doing the recording?
Uh, well, this one normally they will separate it. Trade payable,
Category.
different person. Okay, trade receivable, another person. That is to avoid them from doing fraud, meaning they can, I mean, they can conceal manipulation. Yeah.
Okay.
So, but then you have to understand first. Yeah. And then if you are assigned to do this, then you will be only in charge of trade receivable or in charge with trade payables only. So it can't be like both different person. Yeah, that is for accountability lah. Okay, but then you need to understand what is cash purchases, what is credit purchases. Cash purchases pay immediately. So the source document, you will see cash bill. Okay, and then what is the prime entry will be the cash book. Now, credit purchases. So what is the meaning credit purchases? Credit purchases meaning the business buy the trading goods, and then the payment will be later according to the credit terms. So sometimes 1 week, 2 weeks, 30 days. Okay, the most is 90 days. 90 days is 3 months. Now, the source of document. Okay, normally, in order for us to distinguish between cash purchases and credit purchases, we look at the source document. You know what a source document, isn't it? The source document is the document evidence. The document that evidence the transaction had really happened. So, if the documents is purchases invoice, then meaning this is credit purchases. Okay, or if you look at the transaction, the direction, the business. Okay, let's say our business is ABC. ABC Berhad receive invoice from CDE, meaning this is credit purchases because receiving. As what I've told you, the flow is always from the seller to the buyer. So if we are receiving, meaning indicating we are purchasing from CDE company, okay, on credit. So the source document, we look at purchase invoice from trade supplier. So what is the book of prime entry for for credit purchases? So it will be purchases journal. Okay. Other than that, known purchases journal, also known as purchases day book. So don't be surprised in the question they will ask you both of these terms. So you must understand. Prepare purchases journal or prepare purchases day book. So they are carrying the same meaning. Okay, this prime entry, okay, the purpose is to keep track the amount owing to the trade supplier. Now, in credit purchases, we have trade discount and we have return outward. Okay, what is trade discount? Like, remember yesterday or last night, we have discussed about trade discount. This trade discount is given by the trade supplier. Okay, a percentage reduction from the trade supplier. So what is the source of document? Okay, it is shown in the invoice. Yeah, the invoice received from the trade supplier. Receive, yeah, receive. And what would be the books of prime entry for trade discount? Trade discount will be recorded in the purchases journal. Okay, trade discount, actually we don't record, but for transparency purposes, accountability, so we have to show it in the general journal. Okay, so we get the net amount, the gross amount, and then we minus with the trade discount. Then only the net will be shown, okay, or will be recorded in the books. So we will see that later. Huh? So return outward. Return outward, look at the direction outward, going out from the business. So meaning this is referring to purchases return. Okay, when trading goods are returned to trade suppliers, so the reason being because it's defect, rusak, spoilage, legal rights. Legal rights meaning this is different quality or different brand, different quantity. That is legal right. So the source of document for this, it will be credit note received. Okay, meaning you have to look at the wording. If receive credit note from the supplier, this is referring return outward. But if credit note sent to the trade receivable, that is referring to return inward. So different. So you have to look at the keyword that is received or sent. Can you understand what I'm saying here, Pedro?
Yes.
Yes, huh? Noel, you okay? Huh?
Okay.
Okay. Now, what is the book of prime entry for return outward? So return outward journal. Okay, we are going to prepare all this according same format. So this is the cycle. So we must have the source document. From the source document, we record in the books of prime entry. Then after that, we have to do the posting to two ledgers, general ledger and purchases ledger. So the source document will be, you will have purchases invoice. So if it's purchases invoice, meaning indicating credit purchases. So credit purchases, prime entry will be purchases journal, right? Purchases invoice, if you see receive purchases invoice, meaning you have to open up prime entry purchases journal. Now, if it's cash bill meaning referring to cash purchases. What is cash purchases? Okay, the business buy the good from the supplier and immediately make the payment. So cash bill. So this one, the prime entry will be cash book, right? So payment voucher. So if it's cash purchase, credit purchases. So after the credit term due, okay, so we have to make payment. So we must attach the payment voucher with the purchases invoice, and then we have to record in the cash book for payment. Credit note. When the business return the good to the supplier and the supplier agree, the supplier will send the credit note to the business. So once we receive the credit note, then the prime entry we have to record in the return outward journal. Okay. Then after that, we do the posting to general ledger and purchases ledger. Now, since the transaction is involving the trade payables, so for any transaction involving trade payables, we have to do two-step to do the posting into the ledgers. So we're going to learn that later. Huh? So from the purchases cycle, we know that there are three types of transaction that are involved: credit purchases, return outward, payment to supplier. Yeah. So these are the things that we have to do to record in the prime entry. Now let's go through one by one. Huh? So credit purchases first, then later we go through return outward, then the last one will be payment to supplier. Now credit purchases. Okay, again, you must understand the concept of credit purchases. I repeat, yeah, credit purchases meaning is the business purchase the good, the trading item. Yeah, trading item must be a trading item. Non-trading item is not considered as credit purchases. Okay, it must be the item that the business buy and sell it back for profit. Okay, the books of prime entry will be purchases journal. Okay, other name of purchases journal, purchases day book. So what is purchases journal? What is purchases day book? This is a listing. Listing. You know what is listing? Listing meaning we list down according to the daily basis from, let's say, for the month of November. So we list down from the 1st of November, 2nd, 3rd, 4th, 5th, 6th, 7th, 8th, until 30th of November. We list down on daily basis how much is the credit sales. Yeah. So is a listing of all the credit purchases based on the dates of the purchases. So like a diary, where we record on daily basis what do we do today until end of the year. So same goes with the business. They have to jot down all the important activity, that is purchases activity and selling activity, one by one on daily basis. So it's a listing, credit purchases based on date of purchases. Usually the purchases invoice number are listed. Okay, we have purchases invoice number. So for easy reference, it should be noted that the invoice number are not in sequence. Now, the invoice number, of course, is not in sequence because we are receiving the purchaser's invoice from the supplier, which is not within our control. So the number will be based on their numbering system, their own numbering system. So it's not our numbering system. So that's why it's different, not in sequence. Okay, and we have closing of purchases journal. So meaning at the end of every month, we have to do this process. That is why the accounts department are very busy at the end of the month because they need to do the closing. So the purchases are posted one by one to the credit side of respective supplier's account in the purchases ledger. So remember, in the purchases ledger containing individual trade payables account, isn't it? Individual trade payables account. So trade payables account okay, trade payables account. Ayo. So trade payable account is liability, yeah? So liability. So meaning credit item, yeah? So whenever we have the purchases are posted one by one to the credit side, it will be recorded on the credit side of this trade payable individual account. Let's say this is trade payable A. So it will be recorded on the credit side. Let's say we have credit purchases from A, 10,000. So it will be credited 10,000. Okay. In the purchases ledger account. So this will be in the purchases ledger. PL, purchases ledger. So trade payable liability. Sorry, trade payable A. So this liability is, I'm just showing you the category. So meaning if this liability is a credit item. So whenever we have purchases, credit purchases, before we don't have 10,000 in the trade payable A. Now we have 10,000. So meaning increase, isn't it? So credit item increase will be credited. So that's why we put on the credit side. Okay, so this is important. The total is then posted to the debit side of purchases account in the general ledger, meaning at the end of the month. So this one, we record according to the date of the transaction. So that's why we have two steps. The first thing, we have to record based on the date of the transaction. Then at the end of the month, the total then we put on the debit side of purchases account in the general ledger. So then in the general ledger, we're gonna have a purchases account, yeah, purchases, and then we have trade payables control account. So this is where we do the double entry, okay? The double entry completed when credit entry are posted as a summary total to the trade payable control account in the general ledger. So let's see the illustration. So I wanted to read this. Record the above transaction in purchases journal. So this is the question. So meaning if the question asks you, okay, this one very easy because specifically the question tells you which prime entry. But then in the real exam, they don't tell you what is the prime entry. They just state, record the above transaction in the books of prime entry. They combine everything inside here. Then you have to use your own judgment which prime entry that this transaction should be. So this is where you need to apply your knowledge or your understanding credit purchases. So we look at the indicator. Like this one, receive invoice number 330 from Fiction Store as purchase of good at the list price 3,200 less trade discount 35%. So receive, this is the keyword, receive invoice. So definitely showing us this is purchases, credit purchases. Yeah. Credit, how do I know credit? Because the wording is invoice. And how do I know this is purchases? Because of the word receive. Okay. So fiction store is the supplier. Our business is Han Trading. Okay. We are Han Trading. So we record in the Han Trading. Right? So when we record, so these are the important particular that we need. Invoice number 330 and the gross price, the list price 3,200 and the discount 25%. Okay, so meaning we have to record the above transaction in purchases journal, and then after that post the data from purchases journal. First step, book of prime entry, and to general ledger third step, and purchases ledger second step. So in the question, in the exam question, they don't tell you like this: post the data to the general ledger, to the relevant ledger. So meaning to say, with your understanding of how to record all this, so you should decide how to do the recording already. So this is the solution. So the first one, March the 2nd. Okay, we list down the date, March the 2nd. So, okay, let me explain the format first. So we have a column, in columnar form. So what are the important details that we must have? Date column, okay, to show when was the transaction. Particular column, okay, to explain all the particular that is involved in the credit purchases. Invoice number column, okay, sub column to do the adjustment on the trade discount. Then the total column is the net after the trade discount. So these are the the 5 column that you need to prepare from time to time for your prime entry. So you must be able to draw, yeah, draw the journal. Okay, so you must put the heading, date column, particular column, invoice number column, RM column, and another RM column. Okay, and then we have the total column. This is total column, the bottom part, and this one is all the particulars lah. So March the 2nd just now. Okay, we record the date March and then the 2nd, and put the name of the supplier, fiction store, and you put the trade discount. So you indicate this is less, less trade discount, 25%. So remember, as what I've told you, trade discount is not recorded, but for transparency purposes, we have to show it in the purchases journal. So that's why, okay, we put the invoice number 330 and put the gross amount 3,200, and then apply the 25% trade discount. So 25% of 3,200. Do you know how to use this? How to calculate? 3,200, this 25% you have to convert into the normal numbers. So 25 divided by 100%. So you will get 0.25, isn't it? So 0.25 times 3,200, then you get 800. Can you understand how to get that 800?
Yes.
Yes, huh? Okay. So then you put negative, huh? You must put this bracket. Otherwise, you will confuse yourself. You go in plus 3,200 plus 800. That's wrong. So this is a discount. So you must follow less, huh? So put the bracket. Okay. So normally you are required to prepare this in Excel form. Huh? So you know how to use Excel, huh? So make sure you understand how to use the Excel. So 3,200
We don't
yeah.
write negative. We use bracket instead of negative.
Yeah. Normally, if in Excel, if you need to format it first lah. If it's negative, then automatically they put the bracket here. You know how to use Excel, huh, Kelvin?
Yeah.
If you don't know, you let me know. Then I can show you how to do. Okay. So negative 800. So 2,400 the net. Then you put on the last column. Okay. On the 7, look at the 7. Goods supplied by growth trading at list price 2,800 less trade discount 20% invoice number 218 received. So the keyword receive and invoice number. So meaning indicating credit purchases. Okay, so take the name of the supplier, okay, the gross amount and the trade discount. So record in the prime entry. This is the prime entry, purchases journal. Okay, prime entry. Yeah? So the heading must be purchases journal. Yeah? Purchases journal. So this one is only showing you the flow. So first thing you put in the purchases journal later, then you have to post into purchases ledger. Then the last step is record the double entry in the journal ledger. So 2 steps. Okay. So growth trading, you put the date, growth trading, and again repeating less trade discount 20%. Okay, put the invoice number 218. Okay, the gross amount is 2008. So 20% convert into normal numbers. 20 divided by 100 is equivalent to 0.2, isn't it? 0.2 times 2008 is 560. Okay. So minus, then we get 2,240. Or either if we want to check whether this is correct. So since less 20%, 100 minus 20% is 80% remaining, isn't it? So 0.8 times 2008, if you get this amount, meaning you are doing correctly. Do you understand what I'm saying?
So
Can
is this a standard format for purchase ledger?
Yeah, this is not purchase ledger. This is purchases journal.
Yeah,
Primary.
general.
Yeah, the standard format. You have to follow this format. If you don't follow this format, you don't get marks. Okay, make sure you use this format. Huh?
Okay.
Easy to remember. We must have a date column, particular column, invoice number column, RM column, and another RM column. So all the prime entry are more or less using all this same format. Okay. So the next one is again the keyword. Invoice number 245 received from Henry Enterprise for good at least price 4,000. Trade discount 25% to be deducted. So invoice number and receive. So indicating credit purchases from Henry Enterprise. So record in the prime entry. So the name of the supplier, because you haven't paid, isn't it? So you must know who do you owe it. So that's why you need to take the name of the supplier, Henry Enterprise, and you have to show in your prime entry, okay, the trade discount offered by Henry Enterprise. So less trade discount and state the percentage 25%. And also don't forget to include the invoice number. Okay, the gross amount 4,000. And then how do we get 1,000? Again, convert this into normal numbers, 25%, meaning 25 divided by 100. So 0.25. 0.25 times 4,000 equivalent to 1,000. So we minus, so the net after trade discount is 3,000.
Oh, also when we record, that we must use a comma for when 2000 something like that.
Yeah, this one, if you format in the Excel, this one automatically will comma. You just put
Oh.
1,000 there, it will appear as comma here.
Oh,
Mm. You just have to format like, let me show you. Yeah. So this is the comma function. Let's say this column, I want to format as a comma, but I want to make sure I need to decrease decimal. I don't want to have 2 decimal places. So I decrease. So let's say I put 5,000. It will appear like this, 5,000 automatically. Okay. And let's say if I want to put this as negative, I just type minus 5,000. It will automatically bracket.
oh,
So if you want to total this, okay, you can do it manually, but you can do also formula, but then sometimes if you're not really expert with Excel, you tend to get it wrong, wrong answer lah. So this one is auto sum. So I just enter, then this is negative. Okay. So from time to time, if you have like question on how to use Excel, let me know. So we can show you, either me or Miss Chan. Okay. Now you have tutorial today. So I hope you have done your tutorial. Miss Chan will be conducting it later. Okay. Where was I? Now trade discount, you have to show it 480 for fiction store. Yeah. Then minus, so net amount is 1,920. And then Henry Enterprise, the last sales. Henry Enterprise delivered good 3,360 at list price with invoice number. Delivered. Henry Enterprise delivered good. So that is the keyword, delivered good, meaning Henry is a supplier. So with invoice, so meaning indicating credit purchases. So that's why the prime entry will be purchases journal. Okay. Purchases journal, so record according to the date, 28, Henry Enterprise. Okay, we must know what is the name of the supplier that the business is owing. So that's why we put Henry Enterprise. And we must know how much is the trade discount given. So less trade discount, 25%. And the invoice number we record in the invoice column. Okay, so 840. So how do we get 840? 0.25 times 3,360. Then the net amount, then we put into the last column. So no more transaction for the month of March. So we can do the total column here. Okay, so meaning we must put the last day, 31st of March. And then since this is purchases journal, isn't it? So you put here as purchases account. And remember, in a bracket, you must put a bracket here and you put DR. DR means not doctor, but is a debit. So because remember, purchases is an expenses. Expenses is a debit item, correct? So that's why you just put here debit. So when we do the ledger account later, you will put on the debit side. Then you total up, yeah, the last column. So 2004 plus 2,240, 3,000 plus 1,920 plus 2,520. Then we have a total of 12,080. So this is the first step. So this is the first step. We must do the first step. We have to post this one by one. First step.
Oh, do we also need to highlight?
No, no need. This one, no need to highlight. This one is your answer. You mean highlight this one? No
Yeah,
need.
yeah.
No need. You just do your answer according to this lah. No need to highlight.
Yeah. In the tutorial, we also need to use Excel and then we screenshot or something.
Yeah, you have to present. Have to
Oh,
present to Ms. Chan.
okay.
Do this format and then present it. So this is the second step. Okay, easy for me to remember lah. So the first step, what we do, okay, it will be recorded in the purchases ledger. So we have to open up. Okay, this one a bit messy, never mind. Okay, trade payable, I put fiction. Okay, and then I put another one, trade payable growth. If you look at your notes, yeah, and then after that we have trade payable Henry, and then another one is supposed to be fiction, but then fiction already open, so you don't need to open anymore. And also Henry, you already opened Henry, so no need to open Henry anymore. And then This is where you only apply single entry. We call it single entry. First step, single entry. What is single entry means? We only do, if it's debit, we only do debit entry, no credit entry. So meaning is a memorandum entry. So just to keep track how much individual trade payables that the business owing. The second step, this one, the bottom part, then this one we have to do double entry. Okay, so this, okay, remember trade payable, like what I've explained to you, is a liability. So when we have a purchases journal, is it increasing the trade payable. So if it's increasing the trade payable, meaning we have to do a credit entry, but record the net after trade discount only. So this one, record this amount. Net after trade discount only. So we record fiction 2,400. Okay. Record growth 2,240. We credit. You understand why credit? Because this is a credit item, liability. So credit purchases increasing the trade payable. Before, how do we know it's increasing? Before, there is no amount owing to trade payable fiction. Now we have, so increasing, isn't it? And then Henry here, so we have 3,000. You record the net, not before the discount. And then 1920, 1920, and then 2520, Henry. And you must record according to the date. So this is March the 2nd. Okay, March 7, March 14, March 20, March 28. Then the particular, since this is purchase journal, yeah. So you put the purchases as a particular. All this purchases, 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 purchases. Okay, you will see this in your next following page, the answer, the appropriate one. But now I'm just explaining it to you. Now the second step, end of the month. So in the general ledger, okay, we're gonna open a purchases account and then a trade payable control account. So this is where we are going to do double entry. Okay, so purchases account is an expenses, a debit item. So a total for the month is 12,080. So we take this total. Okay, we debit. So this is debit, isn't it? So 12,080 we put on the debit side. So if this is debit, definitely the corresponding account, which is trade payable control account, will be credit. So we record on the credit side. Okay, and then based on this date, so 31st March. This one also 31st March. And the particular, okay, in the purchases account, this purchases account, the particular is name of the account that is being credited, trade payable control. And then in the trade payable control account, the name account that is being debited is purchases. Okay, so that is why in the purchases ledger, individual balances, you are recording like this. Okay, this is a new notes, but it's very messy, isn't it? But you have the old one, so you can refer the old one. So this is actually explaining to you why when you record, you don't have to show this arrow. You only show like what I've shown you here. So you record purchases account. And this one, you don't need to write down. Do you get it?
The old notes, sir, doesn't have the March 31st, the on the left one.
This one?
Yeah.
Oh, that one is after you look. I mean, because this is combined with other transaction,
Oh,
so
okay.
it's supposed to be this transaction, but then they combine it all together.
Oh,
So
okay,
that's why it
okay.
looks messy. Okay. So I prefer the old notes. Okay. Meaning. So the next time I have to show you the old notes now. This one is very messy. So the purchases, so you must record the net of trade discount 2,400. Yeah, that is meaning referring to the last column of your purchases journal, 2,400. And then we have two occasion, fiction store on the 2nd and 20th. So same goes with Henry. We have transaction 14 and 28. So 3,000 and 2,520. Now in the purchases ledger, at the end of the month, what we do a listing, trade payable listing. So taking into account individual account fiction store, okay, since this one is 2,400 plus 1,920 is 4,320. Yeah? So we don't have this yet. Yeah. Okay. So meaning this is the balance. For this one, okay, 2,240. Henry, 5,520. So altogether, 12,080. So that is why when we do the recording, yeah, in the general ledger, so purchases account, we open a purchases account like what I've shown you just now, okay, and we have trade payable control account. So debit purchases account 12,080 and credit trade payable control account 12,080. We don't have this yet, so this one later. Okay, the journal entry, this is only to explain to you. You don't have to prepare this unless you are required by the question to show the journal entry. Then we have to do the journal entry. So by putting the last day of the month, and remember, purchases is an expenses. So meaning to say, so increase of expenses, a debit item, we debit purchases. So if we know debit purchases, definitely the corresponding account should be credited. That will be trade payable control account. Okay. Any question? This one is actually if after we consider the purchases return, which this is the next transaction. Now, purchases return. What is purchases return? Meaning a good that returned by the business to the supplier because of defects, yeah, because of legal rights, meaning probably they ask for 1,000 unit, but they provide 1,500 unit. So the other 500 will be returned to the supplier. Or they want A grade, but they give C grade. Okay, they have to return it and then exchange with the suitable grade. Okay, so if you have purchases return, so this is also known as return outward. So any of this term will be used in the exam. So it carries the same meaning. So what is the books of prime entry for purchases return? It will be return outward journal. Okay. So other name for return outward journal, so many. We have return outward day book, purchases return journal, purchases return day book. So they carry the same meaning. So don't be surprised if you are asked by the question any of this term. So meaning it carries the same meaning. So what is purchases return day book? This is a listing. Yeah, a listing, meaning we list down all the returns during that particular period, which is based on credit note received from the trade supplier. So if it's received, meaning indicating return outward journal. Okay, again, the credit notes numbering are different because this is according to the supplier numbering system. Yeah. So trade discount, please note that the return outward should also be deducted with the same a percentage of trade discount as when it was purchased. If we obtain a 10% trade discount upon purchase, we should also deduct 10% from the amount of good return. Okay, what does it mean? Meaning when we have a return, so normally in the transaction, they will not indicate there is a trade discount. Yeah, they will not indicate. So meaning you have to refer from your previous purchases journal. If the previous purchase journal stating there is a trade discount with the same name of the supplier, so you need to provide the trade discount in that particular returns as well. Okay, so closing of return outward, more or less the same like what we have just now. At the end of every month, the purchases journal, the return outward journal is closed and ready for posting. So the returns, okay, posted one by one. Now, the effect is if the business return the good to supplier, what happened to the amount of the trade payable? Reduce, isn't it? Reduce a credit item. So a reduction of a credit item. So definitely we have to record on the debit side because credit item, isn't it? Reduce meaning we have to record on the debit side. So that explains why when we make the return, we post one by one to the debit side of the respective supplier's account in the purchases ledger. Okay, debit side. Now the total is then posted to the credit side, return outward account in general ledger. So this is the second step. That is, we open up in a general ledger, so return outward account and trade payable control account. So credit side of return outward, and then we debit in the trade payable control account. Okay, why return outward credit side? Okay, because remember, actually, all these purchases and sales, sales cycle is actually considered as inventory. Yeah, inventory is an asset. So asset, debit side. Okay, we have 4 accounts involved actually. One is purchases. The other one is return outward. And then we have sales and we have return inward. All these are inventory, but they are recording different value. So like purchases, yeah, this one is cost. This one also cost. This one is selling price. This one is selling price. So because of different value, so they are divided into 4 groups of account, but using the same concept. That is, they are categorized as an asset. Okay, just for understanding of how we record, why debit, why credit. Now, if it's increase, is debit. Okay, increase, debit. So decreases, credit. So now, when we purchase, what happened to the level of inventory? Increase, isn't it? When we return the goods to the owner, the supplier, reduce. The level of inventory, reduce. When we make sales, the level will be reduced. When the customer return the good to the business, return inward, so the level of inventory increase, isn't it? So that is why, because of this direction, so when we have a purchases, we record on the debit side. When we have a return outward, we record on the credit side. When we have a sales, we record on the credit side because we are following these rules. Return inward, increase, so we record on the debit side. So that is why return outward, we do credit entry. So that explain, okay, return outward account, on the credit side. Can you understand?
Oh yeah.
Okay. Now, if you understand, so memorize. Return outward, always on the credit side. Return inward will be the opposite, debit side. Why? Okay, because actually all of this account involving purchases activity and sales activity, okay, is affecting the level of inventory, which is an asset. So in purchases increases, so will be debited. Sales decreases, so it will be on the credit side. Return outward decreases, it will be credit. Return inward increases the inventory, so it will be debit. Okay, now let's go through the illustration. Now, ZOC Trading provide the following information. So we are ZOC Trading. All good purchased with the terms of 20% trade discount from list price. So we refer from the the purchases journal, and all the purchases journal is standardized. So we are receiving 20% trade discount. So like what we have in this transaction, return damaged good 500 to Zoe and company and receive credit note. The keyword is receive credit note. So this telling us this is return outward. Okay, the supplier, that is Zoe and company, they agreed with this return. So why? That's why they send the credit note to the business. So we record, yeah, as a return outward journal, yeah, receive. Okay, but make sure you consider, okay, refer from the purchases journal, we have 20% trade discount. And then receive credit note, again, this is received. So return outward. Damaged good, 1,000 return to Roy. Return to Roy. Okay, so and then credit note. So this is receiving credit note also. Zoe and company send credit note. So we are receiving credit note. So record the above transaction in the return outward journal. Okay, and then post the data from return outward journal to general ledger and purchases ledger. So we are doing the same format like the purchases journal just now. We have a date column, particular column, just now invoice column, isn't it? But now we change to credit note number. We have 2RM sub column, and this one is the last column, the total column. Okay, so we need to record the date of transaction, June 4th. So this is the first step. Yeah, first step. And then this one is your second step. Okay, so remember, put the gross, okay, and then consider the trade discount 20%, 20%, 20%. Okay, 0.2 times 500 equivalent to 100. 0.2 times 800, 160. 0.2 times 1,100, 220. 0.2 times 280, 56. Then put the net amount on the last column. So this is where we do the recording, where we record the net after the discount. Now the first step, so we record single entry in the purchases ledger. Open up a purchases ledger account, and then open the T account for trade payable Roy Agency, trade payable Zoe and Company, trade payable HM Store account. Okay, and then record. So remember, return outward, okay, reduces the trade payable, reduces, so a credit item. So that's why this is being credited. So we debit. So we debit 880, we debit 400, okay, we debit 640 after the trade discount. And then the last one is on the 23rd, return the good, okay, record 224. So reduces, so that's explain why this is being debited. And the particular, because it's from return outward journal, So you put down return outward. So this is what we call single entry. Single entry, that is, we only do a debit entry in the purchases ledger, in the trade payable Roy, trade payable Zoe and Company, trade payable HM Store. No credit entry. Okay, and when we record according to the date of the transaction. Okay, that is the first step. This is the first step. Single entry. We call it memorandum entry. Okay, why memorandum entry? Because we do single entry, one debit entry only, no credit entry, just to keep track how much the business owing to individual trade payables account. Now, at the end of the month, we do the listing. Okay, since this is a credit item, but then debit is more here because we don't have other transaction. So that's why this is being negative. Negative. And then we have total 2,144. And this is your listing. When you do the listing, okay, total 2,144, and this one is your journal entry. This no need to prepare if the question did not ask for it. This one is only to explain to you the journal entry for working for the end month posting. That is, we do the second step. Okay, so remember, I asked you to memorize return outward is credit. So return outward credit 2,144. So if you understand return outward is credit, so the corresponding entry, that is trade payable control account, must be debit 2,144. So open up
The
journal.
credit,
Yeah,
the credit is when the asset decrease.
come again.
Is the credit when the asset decrease?
This is not asset. This is liability.
Uh,
This one is liability, not asset.
liability.
So liability reduce, decrease. So that's why this is credit. Debit. So debit 2,144, and the corresponding entry must be credit 2,144. Now this one, probably you are referring return outward is actually under inventory, which is asset.
Yeah.
Yeah, this is asset. So reduce asset as you return the good to the supplier, the level of inventory become lower, isn't it? Become lesser. Right?
Yeah.
So reduce of asset. So that's why this is credit.
Okay.
So if this is credit, definitely the other corresponding account must be debit. And take note, yeah, this posting, the second step, will only done at the end of the month. So that's why the date is June 30th. Yeah, June 30th for trade payable control account and return outward account. Then the particular in the trade payable control account, the particular will be returned outward, showing the name of account that is being credited. And then in the return outward account, this is return outward account, the particular will be trade payable, showing the name of account that is being credited.
So the credit always on the right, and then debit always on the left.
Yeah, debit must be on the left, credit always on the credit side. Is that what you're telling me?
Yeah.
Yeah. That is fixed already. That is the format. Okay, we still have 10 minutes, but I'm not going to cover this one. Otherwise, you would not understand. Okay, probably I will. Do you mind, like now, because I have to go slow, so that's why the phase of the topic that we cover is a bit slow. So can we have like extra extra class, 1 hour just to finish off this topic?
We have tutorial.
Not today lah. Meaning nighttime ka on your free time.
Oh, okay.
Okay.
Sarah, are you okay?
Yes, I okay.
So what do you think if tomorrow night?
What time?
Tomorrow night 8 o'clock?
8 to 9 lah kan?
Yeah, 8 to 9.
Okay.
Yeah, 8 to 9 using this link.
Okay.
Okay. Noel, you okay? Huh? All right. So that's all for today. So I mean that class is not fixed. Meaning if need arises, then we have extra class. Okay. If let's say we are slow on covering that chapter, so we need extra hours because you see, like now we didn't have a break as well, isn't it? But then still we cannot cover. So tomorrow night, not tonight, huh? Tomorrow night. Did I say tomorrow night or on Wednesday night?
Tomorrow.
Tomorrow, huh?
Tomorrow night. Yeah.
Tuesday night, 8 o'clock. Okay, I'll see you tomorrow night, 8 o'clock. Okay, class. Thank you for listening. That's all for today.
Okay. Thank you, sir.
Okay, sir.
Thank you, sir.
Okay.